Today's video is all about Mintlayer, empowering Bitcoin with a sidechain. We're going to be doing a deep dive and looking into this project in some of the detail, looking at the overall value proposition, the team, the tokenomics, and much more. We're going to be figuring out whether we should be buying this project and buying the dip for the up-and-coming bull run, and if it should be part of our portfolio. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome on the channel. We talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. Whether we go up, down, bearish, or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate that strategy, subscribe to the channel, click that bell so you don't miss out on any of my future videos, including the live streams at 7:30 Eastern, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover on the channel, feel free to let me know in the comment section below. But today's video is all about Mintlayer. Are we gonna buy the dip on this project? Guys, it's a pretty interesting project. I did this deep dive. It took me a couple of days to actually figure out what was going on. I read the white papers, I read all the news documents, everything that was out there to be said about Mintlayer. You know, I kind of went through it, and to be honest, I'm bullish. It's definitely part of an interesting narrative, a future proof blockchain that improves direct token interoperability and enables ways to trade value, create systems, functionalities, and participate in truly trustless finance. And the best part is it's built on Bitcoin. It's a side chain on Bitcoin. So that's a pretty interesting thing. We've seen the Bitcoin narrative pick up in the last little while based on ordinals and other chains that are doing a very similar thing, leveraging the strength of Bitcoin and then using other technologies to improve Bitcoin's, speed and maybe even transaction fees and so on, to make it more better for microtransactions, but also ultimately for the smart contract capabilities. And this is where we are right now, is looking at many projects introducing smart contracts to the Bitcoin network on a layer or on a sidechain, right? So that for me is a really bullish narrative, and something that we need to keep an eye on. Mintlayer, definitely one of them. All right, let's continue. Let's use the website, number one, as our platform to navigate this project. We can critique the website at the same time to see if they have everything that we need here so that we can get bullish. Hopefully we don't have to be digging around too much. We do have some nice links up here: newsroom, discover, build, join, get, ML, Mintlayer, which is the ticker. ML is the ticker. We can learn about Mintlayer. You know what? Let's right click, open a new tab. We'll leave that on the sidelines, and featured in these outlets. Of course, that's pretty good, getting a nice publicity out there. Not bad. I like that. At least they're nice and active in that regard. Decentralized financial markets. So this is interesting because we do know that ultimately one of the utilities of crypto is DeFi. That DeFi is definitely there. So decentralized finance, value transfer of exchange, tokenization system, which I found also really cool because basically they're talking about real estate, tokenizing equity, real estate, and other holdings in primary and secondary markets. So what that really is potentially saying is that we can have a real world asset narrative associated here with Mintlayer, as well as NFTs and so on. As a smart contract platform, they're going to have the capabilities of doing all these things. So this is really interesting, really interesting. So DeFi, of course, value transfer of exchange, two-way pegging, allows cryptocurrencies from various blockchains to interact on a single protocol. Very good. Interoperability also is a very hot narrative. Let's move on. Let's see what else we got here. We have the Mojito wallet, which is great. They already have their wallet, their app that can be downloaded. And what's really interesting there is that they also have swap capabilities. So you have your own private keys anytime from anywhere with Mojito, and desktop and mobile, which is good. And I read that they're gonna have swap, and it could even be some sort of bridge happening there. And what I see generally in the market is is that is a trend where we're seeing a lot of wallets doing native swapping, which again is very, very convenient. You don't need a third party DEX to do any swaps, especially within the same chain, right? If you're going to need to swap chains, I get it. Things get a little bit more complicated. You need a bridge and all of that, but ultimately, at least swaps within the same chain would be pretty good. So that's obviously, if you want more detail, you can discover the wallet. We won't get into that much detail here, but pretty good. Has a wallet. That's what we need, so that you can take self-custody. Some news: Mintlayer mainnet launch January 29th. Okay, that's good. We're definitely in the mainnet scenario. This is why there's a bit of hype, picking up here. What else do we have? November 2023 development. You can check this out. There's a lot of news there with regards to partnerships and listings and all of that kind of stuff. But just keep in mind, guys, this project is fairly new. Like, it's up and coming, fairly new. So there's the news is definitely related to its age, right? You're not talking about listings on Binance or anything like that just yet. So just bear in mind that the news is, correlates with its size and its current position in the market. Technology, a little bit more interesting here. Mintlayer protocol eliminates Ethereum's flaws. Okay, we know that a lot of the competition out here with smart contract platforms, that's their main competitor. That's their focus, is dethroning Ethereum as the main project that has the smart contracts. They're the leader in the smart contracts, still being there, and enhances its features on Bitcoin infrastructure. So best of both worlds. You get, a project that is aiming to beat Ethereum in its, smart contract ways, and then also Bitcoin in its overall infrastructure, which we know is so far the best out there. Like, there's the most reliable, the most stable, the most decentralized, and that's really what the value proposition is behind Bitcoin. So really, if we get best of both worlds here, Mintlayer is definitely got us covered, right? Transaction batching, which is an interesting concept. So transaction batching, basically bringing multiple transactions into one transaction, essentially, and paying one fee for multiple transactions. That's one way they're able to reduce transaction costs. And I find that to be very interesting as well. Enhanced decentralizations with less barriers, so peer-to-peer transfers. The peer-to-peer network in the DEX narrative, the peer-to-peer network or the peer-to-peer concept is a little bit cumbersome still, right? But they're trying to enhance that decentralization by embracing the decentralizations of DEX and peer-to-peer. So for me, you guys know that I really do embrace any project that puts that at the forefront. Privacy and decentralization for me is epic, right? That's the main value proposition for me as an individual. Providing security. So security, obviously, all the enhanced flaws. We know that Bitcoin blockchain is secure, and obviously when you get into a proof of stake, refines proof of stake and eliminates its flaws, because proof of stake does have a few of those flaws, but governed by the blockchain technology and the infrastructure, it eliminates all of that. So that's a good thing. So remember, this project is a proof of stake project. So something to understand, that if it wasn't for the fact that it was built on a sidechain of Bitcoin, it would have definitely have that scenario where the security would have a little bit of weakness based on proof of stake. So we got to understand that. Increasing interoperability, we talked about that already. So you can see that the website is doing a great job just giving you quick, valuable, high valuable quality information. That's what I like about a website. Nice and clear, no ambiguity, no fancy things. We have another really important thing: the UTXO structure and the batching procedures help mask individual balance and transfer of data. Guys, very similar to like maybe Tornado Cash or some other projects that try to scramble up transactions. Guys, remember what we talked about right here: scalability side, basically the batching. I think there's more documentation here somewhere on the white papers regarding this batching process. But this batching, not only does it allow transactions to be coupled together and put together in one big batch essentially, but while that batching process happens, it also gives a level of security or privacy, because it all gets scrambled up in a sense, right? It gets scrambled up, so things become confidential and made for amplified, basically being anonymous. That for me, that is a very important thing. So reducing frictions, Mintlayer allows the financial markets to operate without blockchain. Okay, cheaper, faster transaction fees and native gas tokens, which is another good thing, because the gas tokens here that can be used to transact on the Mintlayer network do not necessarily have to be Mintlayer tokens. They can be, or Mintlayer coins. They could be any token that was created on the Mintlayer, in the Mintlayer network. So if you go on here and you create a token using Mintlayer, that token can be used for gas fees. I haven't seen this yet in the market. I'm not sure if there is another project that is doing a very similar thing, but the base layer, which would be in this case Mintlayer, the layer 1, if you want to call it that, because it's kind of like a layer 2 because it's on a sidechain of Bitcoin, but let's call it the layer 1 for simplicity's sake, because it is an ecosystem. It does have its own blockchain. It does have the ability to create tokens. So let's call it a layer 1 for now. But nonetheless, if you create a token on this layer 1, that token can be used for gas fees, which is very, very interesting. Okay, so obviously from a Mintlayer ML token or coin perspective, there's a little bit of limitation because its utility gets reduced, right? Because if you can use another token to use for gas, then what is the use case for Mintlayer? Obviously, there's a lot of use case, a lot of utility, very bullish, and it can still be used for gas fees. And it might be the case that Mintlayer incentivizes individuals for using the native token for gas. So this is all something that we got to consider, but very, very interesting stuff. If you want to look a little bit more deep dive into the technology, guys, there's a lot to be read with crypto with regards to technology. We're gonna get into the tokenomics and other things at this point. So the website's killing it right now, doing a great job, giving us everything we need very systematically, clearly, no ambiguity. I'm loving it. This is what we need for deep dives. This is what all projects should be doing, is giving us what we need quickly, all the information. Tokenized to enable growth in open source development. I see open source for me. Decentralization. Perfect. Staking, that's one of the utilities behind the tokens. You can stake and obviously participate into decision making. Unfortunately, there's no clear indication here that this is going to be utilize a DAO structure, which means yes, there's voting, but what's going to be handling this voting and how is that vote and the strength of each vote distributed? There's not much information with regards to the DAO. So for if there is a DAO or if there isn't a DAO, and unfortunately, when I went on the Discord and also on the Telegram, all I heard was crickets. Not much activity happening there. So for me, that's a big issue, a little bit of an issue. When you want to ask a question, you want those socials ready, pumping. You need somebody, a representative of the team or somebody that's hired to be there and answer questions, on the fly. And nonetheless, back to the DAO scenario. When you talk about proof of stake and you're talking about tokens that, are in circulation that belong to, marketing and the team and this and that or whatever the case is, funds, all kinds of different funds, you want to know who's making the decisions behind the spending of those tokens. So for me, yeah, a DAO would be a great implementation, and it would be great to see some information with regards to that. But the governments, back to that, mainnet holders will ultimately decide what fate and direction of the net, in which way, how. This is not clickable. There's no information, and when you go explore the ML coin, which will open it up in a new tab, and we'll go check out those tabs once I'm done scrolling through this page. We're almost done, but you can see that there's not much happening there. Ecosystem tools incentivizes the use of ML tokens as they can be used to cover fees. Like I mentioned before, the ML tokens that are created on the network, they can be used for fees. You're not necessarily constrained to use ML itself, which is pretty interesting with that case. So pretty cool stuff. We'll go back to this, exploring that. We'll keep on scrolling. Open source, we talked about that, and we're right away at the bottom here. We have the roadmap, which we can open up in a new tab as well. We got the token, the wallet. We talked about Mojito, that it's pretty cool. And then you can see lots of socials: Discord, X, Facebook, YouTube, and all that good stuff. The LinkedIn might be something that we want to open up, so we'll put that on the side as well. Hopefully I can get in there. And ecosystem, maybe we can go check that out too. We got a lot of good things, and you can see so far this website is killing it. You get everything that you need. Any questions that you have, for the most part, are pretty much right here. You got documentations, you got media, you got news, you got everything you need. So far, so good. Let's get through some of these tabs. So we can scroll back right to the top. And let's kind of do this. This is the technology tab, where you can do a little bit more. research, Mintlayer's slot allocation, consensus, proof of stake, and Bitcoin technologies. So you're kind of balancing between the benefits of proof of stake and the benefits of the UTXO model, which is the infrastructure behind Bitcoin. Really good with the security and all that you need. Bitcoin anchoring, checkpoint system. These are all good things that for security, randomized selection for validation. So it's at random. Protocol selects random stakers to validate, which gives everybody equal opportunity to participate and earn and get rewarded, which is good. Fitting more into less, users can batch multi-token transfers into a single transaction, guys. So this is good. Say you have multiple transactions, say there is multiple transactions to be made. They can be coupled up all into one big batch, and then all of a sudden the block size is limited to 1 megabyte, and the signature aggregation reduces each payments by 70%, which means that the fees and all of that gets reduced, and the clogging of the network gets reduced, which is good because for multiple reasons, speed and obviously transaction fees. So very, very good. I think this is definitely one of the value propositions that we got to understand here. Keep that in the forefront. Sending transactions through peer-to-peer, batching, Mintlayer. This is a very similar thing. I'm not going to repeat it. That batching process, they kind of have some visuals here to give you an idea of how it works. You can do that on your own time. Protocol for every financial use case, wallet, tokenization, decentralization, the exchange, cross-chain directly on Mintlayer, trade any asset directly from the wallet. That's what I was talking to you about earlier, that a lot of these wallets nowadays, they have the swapping capabilities, guys. So you don't have to go on a DEX. Right natively in the application, in the wallet, you can do your thing with a built-in DEX. That's what's bullish, guys. I've been talking about this implementation since last summer, and we're finally seeing these wallets take my advice and do their thing and integrate a DEX within the portal or within the actual software that we hold our coins in, which is the wallet. Perfect stuff here. I'm really bullish on any wallet that has this capability, and reality is a lot of them do already. So that's good stuff. They're keeping up with the market. What else do we have here? Built to be compatible with blockchain ecosystems. This is the compatibility. We have Bitcoin Lightning Network, guys. Just while we have this Bitcoin Lightning Network thing here, that is the way they are able to achieve speed, is using the Lightning Network. Okay, so that's something that we got to understand here. Bitcoin in itself, okay, it's fast, relatively speaking. It's slow when you're going to compare it to other altcoin, other networks. Okay, so the way it's able to achieve its speed and lower the transaction costs, obviously by the batching and using the Lightning Network. So that's interesting. Any native multi-signature multi-sig networks, BIP, which is Bitcoin standard, hardware wallets, integration with private keys, and the UTXO structure. Anything that kind of fits within these parameters are basically supported here with a Mintlayer. Good stuff. Developer enabled, free Bitcoin pollution. I'm not sure what that is, but not really that important. Built for financial use cases. Again, a little bit of repetition. We're going to move through that. The roadmap. Let's do that. I think I already have this already. Yes, I have that tab. We already have that open, and some frequently asked questions. Go check that out, comparing it to Ethereum. What is the benefit compared to Bitcoin? Guys, we can kind of already guesstimate what that is. Feel free to do some good reading. There's some good stuff here on this website. Honestly, I'm very impressed with the website display and the overall structure and the way they have it all laid out there for us. So Mintlayer token and the ML, Gate, MEXC, Bitmart, good stuff. Okay, it is on small exchanges. That could be a negative and both a positive. You know, I say that every time I do a deep dive. From a negative perspective, the volume is not there, the liquidity is not there. And you can tell when you go on MEXC and you try to place an order on Mintlayer, it's not like your orders are getting filled. There's not, buyers and sellers. There's not that many. But that's an indication that we're probably very early here. That we're waiting for a bit of hype, a little bit of interest, and then all of a sudden you get listed on Binance, you get listed on another exchange. Any other exchange that is bigger than MEXC pretty much will bring in significant volume. Even KuCoin will help out here, get this volume going. So this is something that we got to understand here. It's still small. It's still in the stage of growth, and this is when you might want to take a bit of risk before it gets listed on major exchanges. So keep that in mind. We'll talk about this again in a little bit more detail when I wrap things up. The Mintlayer token serves three essential areas: the staking, community engagement, and ecosystem tools. We talked about this. Network fees, we talked about that, and where it gets interesting right here. Okay, guys, so we have our token distribution. Let's see if I can make this a bit smaller. Just a bit so we can see this a bit better. So token distribution fact sheet. We have our different levels or different areas of where these tokens are going to be basically distributed. There's about, right now, there's 400 million tokens in total that is in distribution. It's not the max supply. We didn't hit max supply just yet. Those are going to be slowly, so an extra 200 million tokens will eventually be minted, but we're going to talk about that in a second. For now, I just want you to note that whatever is in circulation is essentially the 400 million tokens is going to be distributed in this fashion. We have the pre-seed sale, very little, fine. We have the seed sale, almost 14%. This, for me, this pre-seed, the seed, this bothers me. This is too complicated, too many layers, too much confusion, but that's the decisions they made. Strategic sale, long vesting, 13%. Strategic sale, short vesting, more confusion, more layers, more distribution, more things to account for. I'm not crazy about it, but it's there. At least it's transparent. At least we can do the math. The numbers don't lie. You can see that if you couple all this together, a good portion, just as of now, we have a good portion of tokens that are basically committed to early stakeholders. So we have to understand that the only way we are protected at this current level, at this current rate, from these people dumping on the market and diluting the price is through a vesting schedule, which we'll talk about in a second. So marketing and listing, again, who's controlling this aspect of the tokens, who's making the decisions? I know they mentioned that they want people to vote and get the community involved, but again, what are the rules behind that involvement? Who's controlling that? Is it a DAO? Is it not? What kind of voting mechanism? I would like to know that. Who's calling the shots here, and how are they going to distribute the overall decision making there as a decentralized protocol? So for me, that's important. Protocol development, again, who's calling the shots here? Very similar to the marketing. Community incentives, who's calling the shots here? Teams and advisors, 12.5%. So they got to eat. Everybody's got to eat. Everybody's got to get paid. I get it. 12.5%. That's fair, I guess. Company reserve. Who's controlling the company reserve? So you notice that I would have liked to see these all almost in a separate section and not have it under the team, like separated by the team. The team should be at the bottom. And ultimately, these three are areas that kind of bother me. They kind of come up to about 40%. Just this protocol, company, and community incentives is under the direct control of the team and advisors, or is it by the individuals, the token holders? Or the coin holders, but that for me, the stakers. But ultimately, there's no real mechanism explaining how that works. And then back to this level, you see a lot of the individuals that are early stakeholders, they're pretty much team members and advisors. That's the reality. They're in so early. They have the same mentality as these guys down here that get in so super early that, there is risk of dilution. So we got to understand that right now, as we speak, there's a lot of distribution to early stakeholders. And I use the term stakeholders because it encompasses everybody that got in early, including the team, advisors, and all the pre-seed sale buyers and all those in strategic long vesting and all that kind of stuff. All those people got in really, really early at a price much cheaper than the current, and they are the risk that we have now with regards to dilution. Okay, so that's my take here. It's a bit of a thing that we need to really understand, but what they do what Mintlayer does really, really great is give us the vesting schedule. So we'll talk about the unlock schedule in a second. Tokens, again, I mentioned 400 million tokens, and then 200 million tokens, coins, I have to use the correct terms, staking rewards. So individuals that are staking are slowly going to get rewarded these tokens here, this amount of tokens over time, which is really, really good. So when we start looking at the overall distribution, this right here is only including the 400 million, it seems. So what happens is that this is going to be directly sent to as rewards. As they get minted, each block gets minted. As each block gets generated, basically what's going to happen here is that those pools, those stakers are going to get rewarded. So really, really good stuff. What's really interesting also, that it's expected that the hard cap will be reached, which is the 600 million, approximately in 10 years. So you're going to see that the distribution is very, very slow. The token distribution, or the emissions for that matter, of these rewards will be very, very slow. So pretty good stuff. Token unlocks. You can see that little by little, after months and months, you up to a year, you're going to start to see it hit 24 months. That's 2 years almost. We're going to start getting into a level where we're going to have almost all of the tokens in distribution that are locked, basically all belonging to this category that we discussed above. So it's not like we can see that the distribution is heavily weighted to early adopters, early stakeholders. We can't see that, but at least we can see that they are pretty much locked up and slowly going to enter the market bit by bit up until 2 years. Now, we have to keep in mind that we are potentially in the beginning of the bull run. The bull run could last. The peak could be in around a year and a half to 2 years. You never know. So what is the incentive of, basically selling on the market during this time? I would say very little to none, given the fact that the market's pumping. Who's selling tokens at that time? If anything, you're hodling through and trying to time the top. So the reality is, I don't think there's so much risk here in the short term, but after the bull run, be sure to be taking profits once we see the market get frothy, once we see signals of a top. Make sure that you get out of a lot of these tokens, because their retracements are going to be massive in the when the bear run comes again in the next cycle, because again, all of these are going to be unlocked. People are going to be in tons of profit, and that's where you're going to see a lot of these individuals to walk away from their bags. Okay, so keep that in mind. Obviously, this goes across the board. It's not just localized to Mintlayer. A lot of the tokens that are in that scenario that are new, that are getting a lot of distribution going and emissions going, eventually individuals are going to be selling on the market. More than just a Bitcoin wallet, we talked about this. Let's not do that anymore. Okay, so what I would have liked to see and show is the locking, and that's on the white papers, but we'll get to the white papers. We're trying to do it bit by bit. I would have loved to see the chart that they have on the white papers right below here, just as a critique, or even something that you can click and it opens up and it shows you a little bit more detail. But if you kind of scroll here, it kind of shows you a little bit of details how they are going to be unlocked, but still a bit more clarity would be pretty good. Let's take a look at the roadmap. Roadmap is great, guys. This is the type of roadmap I really like, where they have both information. If you click, you get more info, which is epic. That's what you really want. You have time, which kind of gives them a bit of accountability. Look, we're hitting our milestones, we're hitting our benchmarks, we're doing what we need to do based on projections, and that is accountability in my behalf. Now, it does seem like maybe they're struggling getting this thing updated. We're no longer in 2023 and they're still on Q4. Is still in testing, debugging? Are we there in testing? No, we're on main net launch. Apparently we're already in the main line, so they're a little bit behind in updating this portion of the roadmap, which it should be a priority. In my book, the website should be a priority to keep it up to date. And we have wallet integration of Mintlayer and MLS token, so we're seeing a couple of things, basic atomic swap system, and so on. So you can see that they have a clear roadmap with time, and so far they've been hitting targets really good. So good stuff there. What else do we have? Games. What's this? GameStop fuss. Oh, this is the thing that I clicked. Let's move on here. Now, there was a section. Let's see if we have it here at the bottom, where we can figure out, about them. Let's see the about. Let's see if we click here, what we get in the about section. If we get more information about the team, Mintlayer tells you about the Mintlayer contributors. We have a lot of the team right here. You can see they're all LinkedIn linked, and that's pretty good. Former Bitrick Technology, Tokenomics, business, but you notice that there's no real indication of who created this, like who's the CEO, founder, or anything like that. And they're trying to keep it very decentralized, not giving one person a sense of authority over the other. For all we know, who knows who's behind all of this and created this? It's not clear here on the website. And yeah, so this is where we're at. Okay, so you can join the team. They do have opportunities. There's a board of advisors. There's not much information here, not clickable information here. So we could say that they're pretty much fully doxed. You could say that because you can look them up. Their names, they have different socials. But when you get on LinkedIn, their profiles are locked up, which is unfortunate. We'll take a look. I'll show you what I mean. So we got partners, which is good. A lot of these partners, take them with a grain of salt, because some of them could be listings. But to be honest, as I'm scrolling, they're not bad. They're not listings. I'm not seeing a partner as being Mexi, and that for me bothers me because Mexi is not your partner. Mexi would be just a place where they're selling your coins, and for me this is good when I don't see Mexi. Cryptobanter.com, I'm not sure what's up with that, if that's the actual banter channel, YouTube channel or not, and really it seems like very small, mid-size partnerships. But what do you expect from a small up and coming exchange? This is good. At least they're active and they got something going on here with regards to be involved in a community. So I'm happy with that. If you have any questions, you can go there. Back to the team, guys. If you go here and you start looking at people and you look at who's involved, that's great. You can see that there's, who the team is. Let's get rid of this on the side. You can see that you got, faces to the names, which is great. But when you start clicking, you're not going to get access. Like, you're not going to see like who these people are. There are a few random ones that you can see a little bit more. I think you might be able, if you want to connect here, you can see who this dude is. He's a strategic advisor to Seedify, Mintlayer, block. So he's not even a main player, and still it would be nice to have that information, guys. You know how it is. Transparency. If you want to be considered fully doxed, a little bit of your background, your education, your network, guys. That is especially in a decentralized system. You can, in a new system. I understand when something is very decentralized, the CEO is irrelevant. I get it, but there's still some major decision making behind some of that capital that we've talked about. That who's going to call the shots on that, and it would be nice to see who that is. That we have this chief operating officer, the COO, founder and CEO of Atomic. I don't know who this is, but it could be somebody that's very high up there. It would be nice to have a little bit more of a formal structure and clarity on who's calling shots here on Mintlayer. All right, let's move on. A Mintlayer ecosystem. What else do we got here? Nothing much. So incubator programs, accelerator programs, grants and incentives. Guys, they do have a fund, which I really, really appreciate. Now, we have to understand, as an up-and-coming blockchain, the ecosystem is in the works, right? They may not even have a major app yet, or any application, any dApps or anything like that. But at least they're going to be putting their money where their mouth is. So they have a fund. So it's a hub of collaboration and innovation. So basically, they're bringing together blockchain enthusiasts, but not just bringing them in a social gathering and doing that, right? They're actually bringing in capital to support. So support generally ranges from 50K to 200K in some sort of grant to help them get going. So for me, that is a really good thing. You're putting your money where your mouth is. You're helping the ecosystem grow by ultimately relieving individuals and developers from the most difficult part and all the friction, which is money. So this is good. A bit of funding, a bit of help there in that regard will definitely help this project move. All right, what else do we have here? Let's go right on to the white papers to see if there's anything really that we missed, because you got to admit that website did a great job. It did a great job. So we don't want to spend too much time here. I know this could be a little bit boring. So participation, we have consensus, participation, proof of stake. We know all of that. The pools, the blocks, the consensus right here. Checkpoint finality. If that's good. Token usage. We already talked about that. What its use cases. Every block you get rewarded. Okay, sure. Bitcoin like footnotes. Okay, Mintlayer wallet. We talked about the Mojito tokenization standard. A little bit of technical aspects. The UTXO model. Atomic swaps. The transaction fees. We talked about that. A lot of good stuff. We're just trying to find if there's anything else quickly. This is DeFi, talking about their DeFi initiatives, their DEX initiatives, and their Mintlayer token. This is where most of us really want to spend some time. Okay, so the staking aspect, you get rewards. If you're staking 10%, earn 10% of the block rewards, which is cool. Community engagement, ecosystem tools, the farming aspect. Okay, this is interesting. So in the first 10 years of the mainnet launch, each main Mintlayer block will generate a reward for the block creators until the total supply 600 million. So right now they're at 400 million total market cap circulation, and then it's going to reach a max of 600 million hard cap. So that's good. Newly generated tokens are collected by pools and participating in the network, and a certain portion of them are going to go as rewards, which is good. Now, this is the chart that I was talking about earlier that I wish they kind of had as a pop-up or something on the website, on the main website, so that you can see that ultimately there's a lockup period and the vesting type. So if you look right here, the pre-seed is vesting type 4, and if you cross-reference it to this chart right here, if you look at the 4, basically at Genesis, 0 tokens were issued for this pool, and in this case it's going to be unlocked after TGE 4 months locked, then unlocking 5% monthly over 20 months. And you can do the same thing for all of these categories, the pools. You can look at the team, for example, again, they're 4, so they're very similar. 0 at Genesis, and they're going to be locked up 4 months locked, then unlocked 5% monthly. So every month 5% is going to be unlocked onto the market, where it could potentially be sold. But again, I don't think anybody in this current state of this market is going to be selling off their tokens as they get unlocked, given the fact that, you know, we are potentially going to be into a raging bull run very soon. So holding at this point is potentially the incentive for all individuals in crypto, not just Mintlayer holders. So for me, this is something to consider. Although there's an unlock schedule that is very soon, in months to say, in some cases, I don't think they're going to be hitting the market very soon anyway. And then if you start looking at, for example, this one, number 3, which one is number 3? Right here, community incentives. They're basically a pool shares 5%, token amount. Yeah, they got, you know, a significant amount there. But what you're going to look at is the vesting period. It's 10% at Genesis. So right away when the tokens were minted, they got 10%, and then 5% monthly over the next 18 months. So there's a bit of a slow distribution of emissions, and that's what we want to see in order to protect the dilution of the value of the coin. So they're doing the right thing, although this looks scary a little bit, because if you look at all of these different categories, they're very centralized into the hands of early stakeholders. But at least there's a vesting period that kind of reduces the amount of tokens that get basically issued to the market or released or unlocked in that case. All right, guys, so pretty good. Let's go back to the main website to make sure that we've covered everything. I think that we're good here. You know, empowering Bitcoin with a sidechain, guys, it's a hot narrative. It definitely is, and I'm seeing that obviously as Bitcoin is hitting those upper levels and potentially going to start hitting, you know, price discovery very, very soon. I'm expecting that a lot of these projects that are in that Bitcoin narrative should run up with Bitcoin with some good strength, given the fact that, you know, it is adding so much more value to Bitcoin other than just a store of value. It is offering smart contract capabilities. So very hot narrative. Let's take a look at the overall metrics here. We can see that it's at about 69 cents at the current time. Took a bit of a dip in the last little while, but that's the way the market works, especially when you're talking about a market cap at about 50 million. The volatility is definitely going to be there. It is a small micro cap type of deal here. You're talking about small cap altcoin, $50 million below its $43 million market cap is a small micro cap-ish type of project. And fully diluted, you can see that it's a $276 million fully diluted valuation, which, you know, is not that much. Even if you look at a big picture, it seems a little bit high given its current status, but we have to understand that there's a bit of hype here in the Mintlayer, and it could be just slightly overvalued in the short term. What else do we have here? 24-hour trading volume doesn't seem much. Circulating supply, in my opinion, we have 62 million, almost 63 million tokens in circulating supply, when we have a total supply, which is currently issued, of 400 million. There's a lot of tokens that still need to hit the market. And like I mentioned, it's very clearly, it's still early. A lot of the tokens are still locked up in that vesting period. So we do have to understand that as tokens get released, it's likely that they're going to get bought up real quick, since that it's a very bullish project, very interesting project. So yes, and there's also that risk that as they get unlocked, they get sold on the market and the price comes down shortly, temporarily, and then gets that bounce. So you can see that the difference between the overall market cap and the fully diluted valuation, there's a bit of a difference here, and I would like to see that get together. But the only way you're going to see that get together is when you see the circulating supply pretty much reach that total supply. But also, as we see the rewards for staking and for validating, we are going to see more rewards hit the market that are going to come out of the difference between the total and the max supply. So there's about 200 million tokens that are reserved for rewarding individuals that are staking and validating from those pools. So this is where we're at. Tokenomics a bit complicated. But once you understand what's going on here, its structure is very similar to many other layer ones, many other base layers that come out there and start creating networks. So for me, this is okay. At least there's no ambiguity. Everything is clear. The white papers and the website does a great job spelling everything out. So there's no sense of, like they're trying to, pull the wool over our eyes type of thing. So pretty good. We got good links here. Telegram, unfortunately, and the Discord was very, very weak. I'm saying that again, I know, but I went on there, asked a few questions, and nothing happened. Guys, still in the water. And we'll talk about their Twitter engagement because it's not really looking the greatest, to be honest. So we'll talk about their metrics in a second when I do my overall overview. What else do we got here? Pretty good overall tokenomics, overall metrics, financial metrics. It's very indicative of a new project. Let's see what else we got here. We got exchanges. We already talked about them a little bit, but we got Mexi, Gate, BingX, and Bitmart. So I think there's one more listed than there is on the website, which means that website needs a little bit of an update with regards to the roadmap and their exchange listings. Okay, so we got to keep that up to date, guys. Nonetheless, still very small projects, small exchanges. A lot of room for growth with this regard because, again, we're looking for volume. Mexi has 48% of the current volume. Gate 32. Gate for me is honestly, I don't like Gate too much. Gate is not my choice. It's the last. They want KYC, so I wouldn't even touch them anymore. But nonetheless, I'm not crazy about Gate. Bing X, okay, up and coming, talked about, and Bitmart, it's hanging around there with a lot of the micro caps and type of degen plays that you're looking for. A lot of them are still there on Bitmart. So again, not enough volume. If you want liquidity, if you want to buy and sell quickly, Mexi potentially is the place to get to do it. But even still, it's not a major exchange. All right, guys, you guys know that I create those overall wrap-ups here with this infographic on Mintlayer. So let's look at this in a little bit more detail. Let's kind of summarize here. Ecosystem is still in testnet phase in the sense that they just got out of mainnet. They just got into mainnet. A lot of the things are still kind of working out. In fact, maybe that wording is not the best, but it would have been nice to see the website at least say that they're out of testnet phase, right? So that's one of the. I know there's a banner at the top saying that the mainnet was launched, which it is true. It's just that it still feels very testnet-like in the sense that there's nothing really built on their ecosystem other than the Mojito wallet, which is good, a good start. You need a wallet. A lot of the times we see ecosystem growth without a wallet, which for me is kind of bothersome. So I'm happy to see that in the Mintlayer ecosystem fund, guys. Bullish. I do like to see a ecosystem put their money where their mouth is and support developers in any way they possibly can, and acknowledging the fact that finance is usually the red tape and the friction to actually focus and grow. I'm glad to see that they're putting a bit of money there to support developers. Utility, pay for transaction fees, very typical, guys. 10 out of 10. Pay for transaction fees, costs associated with token creation. So when you create your tokens on the Mintlayer network, that's what you're going to use the coins for, the Mintlayer tokens for, almost like a gas fee, a fee to get that going. Staking and rewarding, that's the main utility, and that's very common for many chains. Let's move on. The roadmap has clear milestones, dates, and hitting targets. Testnet consensus upgrade, I feel like that is an outdated thing, but if that's the case, that's where we're at. And the main net launch is already hit, and that's great. It's out there in mainnet. We just need to see that ecosystem growth, which is good. So 10 out of 10 for clarity and all of that good stuff, and at least having a roadmap, guys. You don't even know how many projects I go out there and do deep dives on, and there's not even a roadmap. Very unfortunate. Team is great. They're doxed, but the little information about the main players, very little information about the team itself, like the play. But you get their name, okay, fine. You get a picture on LinkedIn, but a little bit more with regards to what they're about. So for me, that would be great. LinkedIn profiles are mostly locked, unfortunate, but at least they're there, showing face on LinkedIn. Let's move on. Socials. Let's zoom in here so you can see what I'm saying. Socials, at the end of the day, guys, unfortunately, Yeah, I would have liked a little bit more. We're seeing they have 65,000 followers, and very little engagement. In fact, in the last little while, in the last 30 days, they're down almost 95%, actually 95.7% from the last month. So they're losing their momentum significantly here with regards to X followers. We know how important it is for a crypto based company project to have X engagement and hype and interest and community. So for me, that's something needs to be going on there. We need to really go and figure out, the team needs to go figure out how they're going to put a bit of effort there. 76 posts for the last 30 days, up 28%. So I feel like they're trying to fight back. Maybe there was an area or a time that maybe they weren't putting too much effort and they're kind of coming back. But this also kind of gives me an indication, and if you look into their numbers, that the numbers, the followers are not very organic. Now, I'm not accusing them of buying followers or anything, but when you see chunky unfollows, like a bunch of individuals following all at once and unfollowing all at once, like hundreds of people following and unfollowing within one day, it seems a little bit disingenuous. So I'm a little bit on the fence as to how they've achieved the 65,000 followers. Although there's a lot of hype here happening with Mintlayer, but how can that be achieved when they're down 95% in the last 30 days? For me, that is a little bit, and they're very new as well on top of it. So I'm on the fence here. I'm not sure what's going on. I went on Discord, no action. How is that the case? The numbers don't match. The old sentiment doesn't match. And then you go on Telegram, and in addition, there's nothing happening there. You can ask a question. You don't hold your breath, because you're not going to get a response anytime soon. So for me, 6 out of 10. I honestly feel like maybe I should do more, a little bit less, but here we are. I feel like this could be easily turned around by getting somebody on board. This is one of the issues with decentralized projects, that they feel like they don't need, number one, to be fully doxed, and also they feel like the community will do all the work for them. But remember, the team does have a certain token allocation. So the team is going to get paid. So if the team is going to get paid, or if there's money or tokens reserved or coins reserved for business initiatives, some of that needs to go into social media. We know how important that is. Okay, so I can harp on this concept all day long, but this is the main idea. Let's move on. Tokenomics, 46% of them are allocated to early stakeholders. You guys know how I feel about that. However, the team has there's a vesting period and reduce the risk of dilution over 10 years emissions. Guys, we know how important that is, definitely. The 10 years emissions just ensures that the dilution is not all at once. And obviously, in the next little while, a lot of the tokens are locked up for the next 24 months or 23 months, which means that it's very in line with the bull run. It's very likely that once we hit that top, we're going to start to see a lot of individuals say, you know what, I'm done. All tokens are unlocked. Maybe it's time to take a bit of profit, guys. And that's when you should consider getting defensive on your gains, because this thing could be a very, very good gainer for the bull run. Okay. 9 out of 10 for tokenomics. Very typical. But again, there's a little bit of that, early stakeholder feel that I don't really like too much. So 9 out of 10 there. Partnerships, this I had a bit of a hard time here, because there was a lot of partnerships happening there, and whatever it is, whatever partnerships they get at their phase, they're great. Given the fact that it's a small project, any partnerships is bullish. So I gave it the rating, and my feeling towards their partnership is directly related to their size and how they're positioned in the market. In fact, I would even maybe go to a 9 out of 10, given the fact that you have so many people, so many partnerships and organizations involved. That is a really, really good thing. Okay, so, and then also the exchanges, 5 out of 10, because there's no volume here, guys. There's no volume. For me, that's risky. Now, I rather, yes, I know getting on Binance and Coinbase and all bigger exchanges, and maybe even more smaller exchanges, so there's a bit of variety out there, but still, it doesn't matter. You want a big exchange for liquidity in one stop, right? That's the reality. But getting in now means that if it does happen, you're early. You're going to get a lot of the volume. You're going to get that pump for the listing, all that hype and all that good stuff. But again, the risk not having liquidity means that if this thing runs and you're up significantly and you try to sell, and if there's no volume on these exchanges, you will be left holding the bag essentially in a lot of profits, and being profitable on paper, but not in realized profit, because you won't be able to sell. And for me, that's an important thing. Now, Mintlayer is poised, in my opinion, obviously not financial advice, guys, to do very well in the up and coming bull run. But what use case is it if you can't sell it on the open market and find that liquidity? So this is where we want to see, as Mintlayer does very well and does what we want to also see, exchange listings that support the volume that we need here for the liquidity. So again, price kind of fluctuates, give or take here and there. So we talked about that. Market cap 53 million. Again, fluctuations here and there since I did do the deep dive. Trade volume is very small, 2.2 million trade volume. Supply, okay, we talked about this, fully diluted and all this kind of good stuff already. I'm not going to get a repetition, more repetition there. So a few side notes, okay, maybe things that I didn't emphasize. The true value proposition here is bringing smart contracts to Bitcoin network. Guys, that's a hot narrative. Bitcoin sidechain, the UTXO model, all the architecture behind Bitcoin is utilized. It is a proof of stake, which is, you know, has its benefits. Of course, we've talked about the, you know, the aspects in the past, you know, of proof of stake. Lightning Network for speed. That's the way they are able to achieve and improve the speed, because we know that Bitcoin, although it's great and somewhat fast, relatively speaking, it's not the fastest for microtransactions, and they're going to need that speed for the smart contract side of things. Payments can be batched together, saving transaction costs. Really cool technology there. I'm not sure of any other project that does that at the current moment. There could be, but I'm not aware of it. Transaction fees can be paid with any MLS01 token, which means the transaction fees can be paid with any Mintlayer token that is created, obviously on Mintlayer. So that's another value proposition, something else that I haven't really seen there. So interesting, but also keep in mind, how does this affect the ML token itself, right? The utility behind it. That's one thing that keeps me in the gray zone. If I have choices to use another token other than the native coin, then the volume and the need to hold ML kind of gets reduced. So I'm worried about that. Almost like Cosmos, almost like DOT type of thing. You don't need the DOT or the Cosmos token to actually transact on some of the projects that are built on those chains. So because they use their base layer. So for me, I'm a little bit on the fence here to see or the gray area. Mintlayer ecosystem fund supports generally ranges from 50K to 200K, which means that they're ready to put their money where their mouth is. Bullish. They will help the team, the ecosystem grow based on providing a bit of, you know, cash. That's the reality. Is a lot of these companies or these blockchain developers just need a bit of relief from the friction of you know, the economy. Today's total supply is 400 million. Okay, this is very important, and each Mintlayer block will generate a reward until the total supply reaches 600 million. So right now there is a total supply of 400 million, and the max supply is going to be 600 million, and it's going to reach that 600 million over time as new blocks are generated and more rewards are issued to you know, the stakeholders that are validating. And hard cap will reach in about 10 years. So you got lots of time and no risk of dilution there. No indicator of a DAO, which would be great to see, you know, how they're going to distribute that authority over some of the funds and the decision making. They say something with regards to voting and getting the community involved, but the question is how is that going to work out, and how they're going to achieve that? Maybe we're still a bit early here. Discord and Telegram has no action whatsoever. It's pretty much dead in the water. When I was on it for about half a day trying to get answers for some of my questions. Team is somewhat doxed. We talked about already. Somewhat doxed. It's on the dox side of things because at least we get a name, a face to the name, and so on. But a little bit more transparency would be great. Website is stellar, well built, lots of info. No ambiguity, a few little updates here and there, but nothing is perfect, I guess. And I've been doing this a lot, these deep dives, and trust me, when I go on a website and it doesn't have what I need, it's annoying. And right now, this website, if you go on it, you get pretty much everything you need, all the information you need to get fundamentally bullish on this project. So it's good. Roadmap is clear. It has all dates for accountability, which I like. A lot of right now, a lot of roadmaps just put general, very general. They don't want to be accountable for dates, because if they don't reach the deadline, then all of a sudden the token starts falling. That shows, for me, that shows a bit of confidence, and at the end of the day, that's something that, you know, adds value to the team. Confident team puts themselves in a sense of accountability. So targets, guys, targets. Look, I'm being very modest here as well. Yeah, you know, we're talking about looking at a project that is very similar. We're talking about Stacks. Stacks is a project that is built on Bitcoin as well. It's not proof of stake. However, it is bringing smart contracts to the mix, and there's others, right? But I chose the largest one to use it as a, you know, ultimate goal. Ultimately, if Mintlayer does reach that level, we're talking about, you know, an 80x more or less, and you're talking about a more or less another nice psychological round number of $50 price target, because that would be solid to see that happen. But of course, you know, these price targets, you know, they're always nice to think about, and they're always very possible. No doubt, all these are very possible. We're still lifting up for that bull run, and we've seen many good projects do 100x, no problem at all. And we see that the market cap currently does support it getting to that level, right? So not a problem at all to see this thing reach a much larger market cap to support a $50 price target, especially with the fact that it is a layer one, right, type of thing. However, guys, we have to understand that we have to wait for the market to give us signals. As a momentum trader, guys, I am very reluctant to always be putting these bullish price targets because we can't tell the future. We don't know if it's going to take the same pathway of Stacks or even meet up with Stacks. What we're going to do is we're going to wait for Bitcoin to show us some highs. We're going to wait for Bitcoin to show, and Ethereum as well, to show some weakness in this market. And on the top of the bull run, wherever we hit, whether it be $50, $100, that's when we'll start getting defensive on the gains, and that's when we will walk away profitable. Guys, if you appreciated all of this, this is the strategy that I use for all my projects. Anything that I get in at, putting targets are great, but ultimately it's about looking at the price action and look at the momentum and the overall sentiment in the market to reach that target. I give it a 9 out of 10 totally here, guys. 9 out of 10 because I know there are some negative aspects, but they're minor. Right? They're very, very minor. And some of them can be twisted into positives, like the listings, right? We know that exchange listings are sometimes not being listed is a good thing because there's opportunity here. So, you know, and the team not being fully doxed, that's super, super important. Who's the team behind Bitcoin? Nobody knows who Satoshi Nakamoto is. So are we going to completely really hammer them down for that? I think this project is decent. All right, guys, I know you're here to talk about charts as well, so let's take a look at the Mintlayer chart and let's see what's going on here. Mintlayer, at the end of the day, has been doing pretty good, okay? It ran up from its bottom with a lot of strength, lots of conviction, a lot of confidence, and then after this level here, which we got the first breakout, volume started decreasing. No more trading volume, people not really getting in or getting out per se. A lot of holders, a few little dips along the way type of thing. Now the question is, are we getting that confirmation high, a lower high at this level? A lower high is not a good thing, especially if we start breaking previous lows. We break the previous lows, we got a lower high, we're gonna get a lower low, and then the trend is your friend to the downside. And it's very likely that we come down to 31 cents if that's the case. It could fall right through to this level. You can see the volume profile, and it's very confluent with all this volume down here, is that if you look at it, there's not much volume happening into here. We really have to start zooming in type of thing, and really zooming in and doing one of these to really isolate the little bumps that we potentially could grab right into here. You can see that I really had to exaggerate the price action to get the volume profile to show me that there is some interest here, a volume gap right down here, and more interest right here, and volume gap down here. And if we make that lower low as a confirmation that we are making a new trend, as a pivot point from here to down here and coming down, we could see a 31 cent Mintlayer. And guess what I would be doing at that level? Number one, I would be a bit fearful. Of course, emotions are always going to be there, but you have to have a plan. Fearful of the fact that we can fall through this volume gap and hit 20 cents. But guess what I'll be doing? Again, buying the dip, DCA. And if we see the daily, let's get into the daily real quick, because the daily is going to give you a little bit of what the momentum is doing. The RSI looks like it's trying to move up and get back into bullish territory, into the bullish control zone. And we've seen many altcoins do that. Hold sideways at the mid zone, at the chop zone of the RSI, right around here, and then make a complete U-turn and get overbought. And that's an indication that we are in a bull run where resets of momentum are not going to happen very frequent. We're going to get little bit retracements, 0.38 Fibonacci retracements, breathers, healthy profit-taking breathers along the way, and then just continuations to the upside. So understanding that we are in a consolidation consolidation at this current moment is very, very useful. We got a nice bullish divergence right here, follow through price action. We come down, maybe get a confirmation low here, and then maybe go for an attempt to break this high and eventually, you know, cancel out the fact that this is a lower high. Maybe it's not. We just need another dip, maybe shoulder, head, shoulder, and then we start breaking this area and making a double top or even a higher high. That would be really, really bullish for Mintlayer in the short term, because as it looks like, this top right here is a potential confirmation high, a lower high based on this one. Now, if that's the case, we start looking for our next confirmation, which would be a lower low. A lower low meaning that we could expect the price to come down and hit a lower level and maybe start coming down as a pivot point. Now, if you look at this, we've been overbought for quite a while here, guys. So maybe Class C bearish divergence. Maybe if you even want to consider that, we hit a nice extension level, 1.618 extension pretty much, and got a quick rejection for a retracement. Do we come down now and pick up some more bullish bids at horizontal levels of support at previous highs, pick up the bullish bids, maybe consolidate here for this inverse head and shoulders that I'm suggesting, and then finally break above this previous high as the neckline, which you can see, let me highlight this again, is very, very possible. Shoulder, head, and maybe come down for another last shoulder, and this is the neckline. So let me make this a bit thicker so we can emphasize its importance. This would be that neckline for that to happen. And if it happens, we start breaking structure, making that higher high, and potentially breaking above this previous high, getting into price discovery once again. Mintlayer could definitely do that. Now, from a bearish perspective, again, we have the 200 daily down hanging out right here at this level. We do have horizontal support at 31. If we get this, if this becomes the confirmation high, the lower high, and it starts making lower lows, we come down here. And the RSI, if it gets oversold, guys, we're coming down. We're going to be coming down to lower levels. And then the convictions on those fundamentals are very, very important. All that deep dive data that I gave you, that's where it's going to come into play. Is it going to keep you bullish? Are you going to be DCAing in the zone? Guys, I know that I will be doing that. If you look at the daily, it does look pretty good, okay, right now. EMAs are still up, green histogram bars, but look, every time we get into some pale green histogram bars like we have done in the past, yes, we do get some fake outs here and there, but generally speaking, every time that happens, we get a few corrective moves along the way, and it could be that's what's happening in the current moment. What I do like is that it finally got into the bullish control zone, but is it possible that we finally get into the bearish control zone after a bit of relief to the upside? Impulsive move down, relief to the upside, another impulsive move down, and get oversold and get into the bearish control zone. Not really good if that happens, and that's why I'm prepared to DCA heavy around this level if that happens, guys. In fact, what I'm going to do is I'm going to put a notification. Let's put it up a little bit higher so I can be ready a little bit ahead of time and maybe make some decisions whether I'll start DCAing, front running the market just a little bit with a few bag or buy orders. This would be my area of interest if we were to come down for a lower low. Guys, this is what I got, guys. Make sure you join live tonight at 7:30 Eastern. We'll be talking about crypto news and price action. If I've offered you any value in this deep dive, you know what you got to do. Slap the like button. It does really help out with the algorithm. And of course, join the Discord, guys. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. Take care, guys. Have a good one. And don't forget, buy the dip.